All right, today is January 19th, 2023. We're looking at the EU. I've got my higher time frame outlook up on the screen at the moment. First thing I always do is look at my most recent primaries that have been created. As a reminder to anyone who doesn't know what I consider to be a primary is a range that takes liquidity and breaks structure. That's the simplest way of saying it, but there is more to it. There's more sort of a setup involved. Here's a good example. Range, initiation, break of structure, price comes back in, takes the liquidity from below there, forms a new range, breaks structure on itself, and breaks major structure. This is now considered a primary. I color them in darker colors on my screen, and we wait for a reaction out of those primaries and trade them. That's really it. It's super simple. But they're powerful. They're powerful ranges because the range that took liquidity appears that it has weight for some reason. I believe it's because the market makers who are moving price protect their positions after they initiate away. So here's another one. You got to train your eyes to see them well, but range, initiation, here's the break of structure. This is the range that comes back, takes the liquidity, and initiates higher prices. Therefore, this becomes the buy primary. And look what happened. As price came back down and tapped right here, right where I've got that arrow drawn, taps right into the open of the buy primary and initiates higher prices. So what this is a connector. Again, higher time frame, range, initiation, break of structure, comes back in. This is the range that comes back in, takes the liquidity from beneath that range, touches the open of another primary, initiates away, breaks on itself first and foremost, and then breaks major structure. This is now a tradable range. This is tradable to go long. The first range that is formed on the B to C leg of these primaries, here's the A leg, here's the B leg, the C leg is the break of structure on itself. So we've got A, B, C. From B to C, we analyze where the first obvious range is within there, and we typically look for a reaction out of that one. So this is a range. This is a range that formed right after the formation had completed. And look what we're doing. We're stacking liquidity in around here. Why are we doing that? It could be to run it. It could be to mitigate it and initiate higher prices. It could be for future. We don't know. It doesn't matter why they're doing it right now. What matters is that they haven't come back in yet and touched it. This gives us insight that this could be liquidity. And so this is what I do. First thing in the day, I look at all of this, I analyze it, and I seem to be spending about 30 minutes, 20, 30 minutes a day just looking at what we've done. And that's really what it is. Range, again, so this is the buy side on my left, and I've got the sell side drawings on my right. Both are 1 hour charts. And I can see that we also have just formed a sell primary. Range, initiation, break of structure. Let me get my tool out. Range, initiation, break of structure. This creates an active range with liquidity on top. This was the range that came in, took the liquidity, broke on itself, and we're just waiting for it to form a sell primary by breaking structure down here. So as soon as we get this break of structure down here, this will have activated. Now, why have I got it drawn on then if it hasn't activated yet, if it's not ready? Because of this. This is a deep mitigation of a daily primary. So even though it's just broken on itself, and I do expect it to break down here, what I'm seeing is because it's mitigated a daily primary, and because of the location of the mitigation and the aggression, speed and aggression, I'm very much so interested in seeing this follow through. I believe it will follow through. It could just be a complex range because we are in quite a sort of complex range what they've sort of halted here, where they're creating bits of primaries from either side, so they're not making it obvious which direction is going to be. But since we have had the mitigation of the daily primary, it does make logical sense that we should have a reaction from here. Does the reaction break structure or not? That's what we're going to see. My bias is yes, it's a daily block. Makes sense that we would have a deep enough reaction. Where would we react to? The most logical place is the most last known biprimary. So now that we've mitigated here, it seems logical then that we'd go back into the next biprimary, which is actually this one right here. So two places that we'll be going to will be either going to here, this one block here, or we'll be breaking structure and going down into a deeper block. This one, this one, this one, or this one. But I do believe that this is the reaction we're having, and we should experience more of a reaction. Whether or not that happens or not, we will see. It doesn't matter if it doesn't happen. It's just our bias. Bias just puts us on a side of we think this is going to happen, and so we can trade it. So there's my higher time frame outlook. We're stuck between a sell primary and a buy primary. Buy primary is the only one that has ticked all the boxes. It's broken on itself and it's broken major structure. Therefore, this is an active block, and this is totally an active range down here. And I'm going to be very interested in seeing when price comes into it, how we react. Now let's jump down to the lower time frame and talk about my trades for the day. I only took one trade. I actually took two trades, and I'm going to try to remember it exactly where it was, but this was the one that profited. The other one was a full loss, and I've deleted it from my charts, and we'll talk about that in a moment. This connected. This is what I was looking for, and so let's jump in it. Let's start here on the sell side of things. Okay, so I'm going to go to a 1 minute chart. And we're going to start by showing you right around here. Okay. So where I'm drawing on my chart is right where I started did my day, my trading session. Somewhere in here, anyway. Now, I didn't understand this mitigation, and this is the first thing I'm always doing is I look to see what we've mitigated and initiated away from. This mitigation doesn't mean much to me. It's in between primaries, first and foremost. It's just a regular range. It doesn't seem to be a transitional range. It doesn't seem to be doing an awful lot. But it's there, and I believe it's there for liquidity purposes. So even though I don't understand why we've stopped there exactly, it doesn't matter because it enables me to put a dollar sign above it to understand that this is a liquidity target. So we could be coming up and initiating from right now into and above this area. It's a potential, especially since we don't understand why it's not logical for us to stop here. It doesn't make perfect sense. Now, this isn't a perfect world by any means, and this trading is not obviously perfect, but we can definitely, it's not in congruency with our bias. It doesn't make logical sense. So there's that, right? There's that mitigation. And so as I'm looking at it, first thing I like to do is jump to the 5 minute, and I see, well, we've mitigated something. How are we pulling away? And there are no sell primaries that are obvious on the 5 minute, except for this one right here, this larger, higher time frame one. But there really wasn't much of anything. So I jumped down to the 1 minute just to see what's going on. Because typically, if this is going to be a mitigation, shouldn't we start making sell primaries? Sell primaries to initiate price away. That's how they initiate prices, right? Primary to primary. And so my thought is that yes, we should be initiating primaries. Instead, we just created 1 minute primaries. I'm on the 1 minute chart. And these 1 minute primaries, like this little guy here, took from this range that broke structure and has held. Now, what was interesting was how we had this wonderfully deep mitigation at the top end here, and that deep mitigation gives us clues that we should be having initiation. We did have initiation. So this is a good mitigation to experience, and it's a good mitigation to see because now we know that we are lower prices. We're bound for lower prices. This was the so now as we pull down price still, I jump down to my lower time frame, 15 seconds, to identify all of these lower time frame ranges and lower time frame primaries. And I see as price gets down here, there was a mitigation where you'd expect it, but it could not break structure. And so when price came back in to this area here, I believed that we had mitigated this little sort of gap in between here, which would have given us a deep mitigation. And so I'm interested in going shorts at that time. So let me clear up the chart. We're going to go down to a lower time frame so I can explain it and show you what I'm thinking. Here's the sell primary. It's not the best one, but it's fine. It is what it is. Range, pull it down here. Range, initiation, break of structure. Stacks money. When it breaks structure, it stacks money. Why does it stack money? Because people move their stop losses. Let's say if they entered here, they move their stop losses. Break of structure. Price then from this point to this point comes up and takes a liquidity. Now, it only just took the liquidity, but it doesn't matter. This is a retail stop. We call that a retail stop because when they just come equal highs or just nibble the liquidity, that's just to get retailers out, those who put their stops 1 pip above the high. They take it out and initiate away. It was a complex range because it took a while to initiate away and break out of itself and to break structure down here. So when we analyze what happened between the B and the C leg, as you can see, here's the A leg and here's the B leg, and the C leg is here. So we analyze what happened in between here, and this is the range in which I identified as being the last range that was formed inside of this sell primary. And by last range, what I mean is it's the last time that price, the highest point that price took liquidity or initiated it away. If you see from this high point here, this is the next highest range that was formed in that area and then initiated away. Typically, it's the first range because you go A, B, C, and so typically they're doing this, right? And so this is the first range. But in this instance, it was complex. This would have been that range that I'm just talking about right here as we're initiating away. But because it was such a complex range, they did this formation before they broke structure. And so this becomes our tradable range. This is the range we're most interested in looking out for. And look what happened, 50% of the range, like literally 50%. You couldn't have gotten a better touch of 50%. Then they initiate away. They couldn't break structure though. So while that would have been actually a okay-ish trade, it didn't break structure, so we could not trade it. Now, so why am I over here interested in taking the short here? At the time, my understanding was that this had held within this top box here and it had stopped within here. It turns out that actually it went just like a tick or two above it. I looked on both data providers and unfortunately it did go above it. So my analysis was actually incorrect here. I thought this was a deep mitigation. which can only mean one thing, really, an initiation. We should be initiating lower prices from here. But because it went over this high just by a tick or two, that meant that we'd broken the primary. Why was that important? Because it was the last known primary. So if it's the last known primary and you've just taken the liquidity from above it, lower prices aren't on the cards anymore at that point. What is on the cards? Higher prices. And so we then need to start looking from the other side of things. Okay, so I'm interested in getting this trade, a sell primary formed after mitigating here. That's the explanation of this trade. I didn't get tagged, okay? Yes, it would have tagged me over here, but I removed my limit, wasn't interested in it. So going back then to the 1 minute on the buy side. This is, oh, sorry, I'm on my sell drawings. Let's go to my buy side drawings. Nope, I did have it on the sell side. Okay. So something I look for is where we've gone, where we're coming from. So this area here was our initiation that initiated higher prices. Yes, we believe that this is a daily mitigation. Yes, that we believe that we might actually break structure at the bottom here. Yes, yes, yes to all of those things, but let's analyze what's going on so we can see areas where we might land some trouble. Range, initiation, break of structure, stacks liquidity. Everyone puts their stops down. Boom, this is the range that initiates, breaks structure on itself and major structure, okay? This becomes a buy primary and initiates and holds price. We then see another one. We get this other, this is only identifiable on a 1 minute. 1 minute range initiation. This is the range that comes in, takes the liquidity and breaks structure on itself and breaks structure, major structure on a 1 minute. This becomes, this range here becomes very important. After we've initiated away and broken structure, let's just do it actually together right from the beginning here. So we got this range, we initiate, there's a break of structure, the break of structure's to the left here, right? There's the structure break. Stacks money. This is the range that comes in A to B and B to C, right? A, B, B, C. As we break on ourselves, we then break major structure, activating the range. What occurs then is we get a deep mitigation. So what does a deep mitigation mean? Well, this right here should have been where we held. This was that first range that price has created on its way out, creating that leg. So we expect price to get held in here, or we expect price to get taken from below that range, and this low will hold. This is a deep mitigation, meaning it took from below this range. And what does that mean? Initiation. If we see a deep mitigation like that and a continuation and a break of structure out of here, you can bet your ass we're probably mitigating, probably initiating away. What was so interesting about this range is how it held. So we had this deep mitigation and initiation. Then price has initiated. Look how far high it initiated. This one tiny little range. So they are protecting this range. What do you think all of this is? So notice how it doesn't break structure? What do you suppose all of this is? A position accruing, right? Seems that way. Um, so we have this weird mitigation. We this price has held within this range, and then we get back down to it again today. So as far as I'm concerned, I'm selling based on the higher time frame outlook, right? It's a daily mitigation over here, deep mitigation of a daily primary. Let me show you that. Here we are on back on the high time frame. We're on a 1 hour. Now I'm going to switch to the daily and pull this guy over here. Range initiation, breaks of structure. Here's the liquidity, and this was the range that pulled up and pushed away. This is where we mitigated. Where would we expect to mitigate? on the daily outlook, without going to any other time frame, this is where we would have expected to mitigate, somewhere in this box here. We didn't. We went above it. Therefore, it's a deep mitigation. Deep mitigations cause initiations away. And that's exactly what we're experiencing, or maybe have experienced. We don't know if we've had it in full, but that here we initiate deeply away. So for me, as I'm getting to the charts, I'm looking for sells for sure because of the deep mitigation. So I'm looking at I'm analyzing my sells, right? So here we go. Deep mitigation up here. This was the major one on the daily. We then form a sell primary. We get another deep mitigation and initiation away. Initiation away. These are sell primaries that have formed. I'm interested in trading from here for obvious reasons because of what I said, but that doesn't occur. I can't get an entry, and I just sit on my hands. So then we switch over to the big one. Then we switch over to the buy side because we're thinking to ourselves, well, if we're not selling, right, we're trying to sell off here, and we've done not a deep mitigation, but a mitigation that has taken out this range. We now need to start looking at what's going on. So I didn't notice that in the moment, but I did notice it shortly after that we had taken out this range. I thought it had stayed in originally, which is why I was looking for the sell. But so then I start reanalyzing and go, well, maybe we're actually going to be going long. So is there any buy primaries that form? So I switch down to my 15 seconds and I analyze it, and I'm like, oh, I see. Range initiation comes back in. This creates a primary. Where do we expect price to come to? This box right here. After the break in structure, which was over here, of major structure, we could call it. This is where I'd expect a bounce from. Lo and behold, you get a bounce from here. And they do it all over again. Range, initiation, break of structure. This comes in, takes a liquidity, breaks on itself first and foremost, and then breaks on major structure up above here. So now this is activated after this movement up here. And so we're just looking for longs. Where do we look for longs from? The range, the last known range inside of that B2C leg. Here it is. Sure enough, what happens? A new primary is formed. Range, initiation, breaks of structure on itself. This primary comes in and forms on it, breaks on itself and breaks major structure. Ergo, therefore, this is now active, and so I'm trying to get involved. I wanted this one originally. I saw what was happening, but as I saw price coming back sort of down into this area, I had a feeling that we could be getting this deep mitigation. I wanted my stop to cover the low, and so, but I also wanted to sort of be involved potentially in here. Hindsight, I would have probably preferred something like a 50% touch like this, maybe a three pips. That would have been the best. Obviously didn't get it, obviously didn't take it, it's fine. This forms, new primary forms, and I can see the only range that's in here, I think it was on 5 seconds. Yep, the only range that formed, like on the way out on the B2C leg, that's the one I want to get involved with. Boom, I place a limit order, no problem whatsoever, get taken in and get initiated away. Now, this is just my own fault. I was going to leave this as a 10R and initiate up to here and let it take me, but because of the sell primary, the weird location of the sell primary, which was here, let's bring it over to my buy side drawings. I expected a reaction from here, and I thought to myself they could bring it down to lower prices, and so I didn't want to get involved with that. So I think I had 5.5, 5.25, something like that, and had my take profit here. Not a problem. Got taken 5R. Absolutely happy days with that. Banked, profited, all the rest of it. So there's my good trade for the day. Could have gone 10R, should have gone 10R really. Should have held out. I just didn't want to. I really wanted to A, bank something. B, I didn't want to experience a deep reaction that took me out. Even though I was initiating quite nicely away from this area, it just made logical sense to me to put my take profit there. So I want to talk about some kind of shitty ass trade I took. I think it was in here. It's hard to remember exactly, but it's it's hard to remember exactly, like I said, but I think it may have been off of this right here, and I was shorting, and I think, yeah, it was. So what it was in here is where I got taken out. So I had a trade in like this as well. I deleted it from my screen, A, because I'm annoyed and frustrated with myself for taking it, but B, because I didn't follow my own rules, and I want to talk about this because this is very important. I don't see or hear other people talking about when they make a mistake and owning up to it. But this was definitely a mistake, and that I want to fix within my trading. And so what it is even though we went above this range just by a tick or two, you can see it now on the 15 seconds. See how it just went above it? So by the time I took this trade, I'd realized already that A, I don't want this trade anymore. So I deleted that one, the limit order. And I'd also realized that we'd taken the high, right? We'd taken the high over here. So I why am I still trying to look for shorts? Why am I still looking for a range initiation breaker structure? They stack the liquidity. This is the range that came up, took the liquidity from above it, initiated away on itself, and broke structure down here. So this is a valid sell primary. But why am I looking for sell primaries when we've just taken out a major one over here? This is what gets me. It's because I just desperately wanted to be in the market. And by desperately, I mean I don't desperately seek to be in the market all the time. But there's something about sitting here for my trading session and not getting in the market and not getting in on some of the action. And that's what I want to discuss today, because I am a little annoyed with myself for taking that. It's a -1. And I shouldn't be in the market taking stupid stuff like this. I knew that we had just taken this out, yet I still went short. I still wanted to go short. I'm not certain what the exact emotions that got me to that point are, but it was out of FOMO for sure. I know that plays a massive part of it. So hands up in the air. I did it. I own up to it, and I want to change things. I don't want to be a trader who does this kind of crap anymore. And so here was a bad trade from me. I'm owning up to it 100%, and I'm showing you as well what I did in an effort so that you can sort of fix your trading from it as well, or maybe just open up to yourself and be honest about it. Being honest with yourself is the hardest part, but I'm willing to be as honest as I can with myself because I want this. I want to be a full-time day trader making absolute millions. And so if that is my desire, my dream, and everything else, I'm going to do what I need to do. I'm going to do everything I need to do to stop taking silly little trades like this. This didn't need to happen today, and I could have sat on my hands beautifully waiting and taken this one beautiful trade here and been satisfied with my day. This one I didn't take. This one I did take, and this one I did take. So 2 trades today, 1 loss, 1 5R. Could have been a 10R. That's a hindsight move. I'm actually very happy with how I traded it, because if you look from the higher time frame, we've mitigated the daily. We're initiating lower prices. This was the only thing that could have helped me out and realize that hey, we might actually not be breaking down here. It's just these low prices really kind of tricked me into thinking, yeah, we're likely to break those lows and take those lows. I should maybe be considering something different there. I'm not worried about it just right now. I'm really just focusing on my executions, minimizing my executions to just quality trades and not making silly ones. And so I believe this is one of the last times I'm ever going to do this. This is one of the last times I will ever make a silly trade. And that feels good saying that. So taking my loss today as a positive, and I'm learning from it. Aloha to all of you. That's my video for today. I hope you took some value from it. There'll be plenty more videos. I enjoy making them for you guys and for myself. And I think we're all learning, growing, and doing absolutely fucking amazing. Hope you're smashing it, creating a ton of R for yourself, and living your best life. All right, catch you soon.